Today's video is video number 5 in my 5-part video series, How Female Coaches or Business Professionals Turn $3,000 a month into a $1 million portfolio within the next 14 years. So in today's video, I'm going to discuss how to decide on your investment in the stock market and actually how to automate that investment. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier and without bias, because I do not work for any investing firm or any third party. I'm just sharing what has worked for me, so I'm not going to recommend anything that would not be in your best interest. So let's dive right in. All right, we are going to talk about my favorite investment in the stock market. I'm also going to show you how to compare different investments so that you can choose one that is going to work for you. I'm also going to share what my clients have invested in. And of course, I'm going to show you how to automate your investing so that you can have this running in the background, and that way you can focus on other things like spending time with your family, building up your business, or traveling more, whatever it is you want to. I first want to talk about a few different investments that you can put inside of your investment buckets like we talked about last time. So if you have your bucket, now you want to select an investment to put inside of that bucket or investment account. The first two items we can invest in are stocks or bonds. And the way I like to look at this is stocks grow your wealth and bonds preserve your wealth. You can see this chart over to the right. That blue line is stocks. So you can see, yes, it is risky to invest in stocks. It does fall below bonds sometimes, but over that long term, it is going to exponentially grow your wealth. And then this red line is bonds. So you can see it's pretty stable. So that's why I like to look at bonds as preserving my wealth. And then you can also invest in individual stocks. For example, you can buy a share of Amazon or a share of Tesla, whatever business you would like to invest in. And then you can also choose index funds. And index funds usually have a minimum that you have to invest. So you can't just buy one share of an index fund. And with index funds, there are a lot of stocks or bonds inside of an index fund. So when you're buying one single fund, you're actually investing in a lot of different companies or even a lot of different bonds. So index funds are a great way to diversify and also get really good returns. When you're investing in index funds, you want to make sure you are looking at the fees. It's called an expense ratio. And you want to keep your fees as low as possible. So for example, 0.04% is a really low expense ratio, a really low fee. And 1% is going to be a really high fee. And I'll show you an example just in a little bit. And then also another type of investment that you can choose is ETFs, exchange traded funds. And with these, you can actually buy them for just the price of the share. And ETFs are like index funds in the fact that they have a whole bunch of bonds or a whole bunch of stocks inside of just one single ETF. And you want to make sure and look for a low expense ratio like 0.04%, not 1%. And you can also have stocks and bonds inside of one index fund or one ETF. And honestly, you don't need a lot of different funds to be successful, because a lot of these funds, index funds or ETFs, will overlap each other. To give you an example, if you're investing in the total stock market, US stock market index fund, and then you're also investing in the S&P 500, that is going to have a lot of overlap because the US total stock market is going to include all of the S&P 500 stocks. So we don't always need a lot of different index funds or ETFs to be successful. We can honestly pick 1, 2, maybe 3 funds and call it good. And now I want to show you how to look up your own index fund or your own ETF that you want to be investing in, and then comparing it to another fund. Okay, I went to Google and I typed in VTSAX ticker. And this is actually my favorite fund, which I will talk about why in just a moment. But you can type in whichever fund you want to, and then if you just type the word ticker after it, it's going to show you the price of the fund and the returns that it's gotten over the years. And then what you can do to compare it to another fund is click on the compare button, and then you can type in another fund to compare it to. So for example, if we wanted to compare it to the Vanguard Total Bond Fund, you can just start typing and it will show you the different options. So we're going to select the Vanguard Total Bond Market Fund, and then we can choose our time frame. I'm just going to use the maximum. So this is the graph that I showed you on that last slide. You can see how it compares over time, right? So if you're investing for the long term, which is what we want to do in order to build our $1 million portfolio, you can see that stocks are going to help us build that $1 million portfolio. But this is a really cool way to compare different funds that you are looking at. And the nice thing about this is you can see the expense ratio for these funds. If you scroll down, it's going to have a column over here for expense ratio. And you can see that VTSAX, the Vanguard Total Stock Market Fund, is a 0.04% expense ratio, really, really low. And then you can see the bond fund is at 0.05%, again, really, really low. So for me personally, my favorite fund, like I said, is VTSAX because it invests in all of the stocks on the US stock market. So it's giving you good diversification and really good returns over time. Not only that, it has a really low expense ratio at 0.04%, and it is a Vanguard fund. Vanguard has been around for a really long time. They are the ones that actually invented the index fund, so they are a really good, stable brokerage company to invest with. And when you are investing at Vanguard into a Vanguard fund, there's not going to be any extra fees that you have to pay. And if you do want more detail on why this is my favorite fund, I have a whole nother video breaking that down. I will leave a link above. You can check it out later on. And honestly, this fund, VTSAX, is the fund that most of my clients invest in. Sometimes they will choose one or two other funds to go along with this fund, just depending on their own situation and their own preference. And going back to the minimum required to invest in an index fund, this VTSAX actually has a $3,000 minimum. So to get started investing in this fund, you need to start with $3,000, but going forward, you can invest as much or as little as you want to. So you could put in $1,000 a month or $300 a month. It doesn't have to be $3,000 every time you invest into this fund. It's just that initial investment that has to be $3,000. And you can actually automate your investing when you're investing in this index fund or in other index funds with Vanguard. But if you don't have that $3,000 to invest, I want to show you the ETF version. So I'm going to type in VTI ticker. And this is essentially just like VTSAX, but it is the exchange traded fund version. So this means you can start investing in the ETF for about $212 right now. You wouldn't have to have that $3,000 to get started. But with Vanguard, you're not able to automate ETFs. So keep that in mind if you're looking to completely automate your investing. And some of my clients have started with this ETF, and then they will switch over later to VTSAX. So honestly, going with an index fund or an ETF that has a lot of stocks inside of it is a really great way to start investing and even automate our investing, depending on if we're choosing an index fund or not. But this is going to help us get to that $1 million portfolio. And we don't want to just preserve our wealth right now, so I wouldn't invest in any bonds. If I was retiring next year, then perhaps I would have some amount in bonds to preserve my wealth. But if your focus is to grow your wealth right now, then I would say be all in stocks and be prepared to handle that risk because it's going to go up and down in the short term, but over the long term, it is definitely going to rise. And we can even take a look at VTI. You can see, right, it goes up and down in the short term, but that long-term trend is definitely on the rise. So one of these investments is definitely a great investment to help you build up to your $1 million portfolio. And then as far as automating your investing so that we don't have to think about this, I went to Vanguard's website and they give us the steps on how to automate our investing. And they even have a little tutorial. So they have you go to their website and then you select profile and account settings. And then you select automatic investment under the banking and money movement section. So you can see they're walking you through it here. And then on the set up automatic investments page, you select the account you want to invest into. So this would be your brokerage account or your Roth IRA, whatever account you have set up. And then with Vanguard, like I mentioned before, you can only automate investments into the Vanguard. They call them mutual funds. An index fund is a type of mutual fund. And then once you have selected your account, you want to select your funding method and how often you want to have money transferred over. So if you want to just transfer once a month from your checking account, then you select that option. And then you enter in the amount you would like to invest. You can do it through dollar amount or percentage, or even split the investment amount equally among different funds that you're choosing. And then once you do that, you're going to review your automatic investment and click submit to finalize your automatic investing. So by automating our investing, we are actually going to build up our $1 million portfolio. And the thing I want to point out here is you want to make sure that you have your investment account set up and then you have which investment you want to be investing in. So if it is VTSAX, when you're transferring your money, you want to make sure that you set it up so that it is actually purchasing VTSAX and not just sitting in your brokerage account, not invested in the stock market, in the certain fund that you want to be in. And of course, this is exactly what I help my clients with. I help them choose their accounts, choose how much they want to be investing, and select their investments, and then automate their investing so that they can build up their $1 million portfolio. And honestly, I've helped numerous clients. I have married couples that I help where the wife owns her own business and the husband works a 9-to-5 job. I also have single women that I have worked with, some that own their own businesses, some that work a 9-to-5. So I've worked with a lot of different clients in different circumstances, and we just work together to figure out what is going to be the best setup for their investments. Comment below and tell me, which investment are you going to choose? I am curious to know. And if you do want help choosing your investments and selecting your investment accounts and automating your investing and even finding extra money to invest, I have a free masterclass where I go over how I can help you do all of these things so you do not have to do it on your own. I will leave a link below in the description and you can check out the free masterclass. And make sure and check out the other videos in this 5-part video series so that you can get every single step to create that $1 million portfolio. And make sure and hit that like button and the subscribe button so we can get this content out to more people. Thanks so much for watching. I'll see you in the next video.